In this video, I coach a trader who made one good trade as to how to improve his trading. Traders on our desk present a playbook trade to me or our floor manager and receive feedback on their trading from our training room. You will see us do exactly this here in this video. Traders build a playbook of their best trades. They build their trading career from these playbook trades. Sticking to your playbook trades helps you make more of your best trades. Viewing us break down a trade shows you the ingredients that go into a good trade. Welcome to an inside peek into how we coach our traders. Hi, I'm Mike Bellafiore, managing partner of S&B Capital, a proprietary trading firm located in Midtown Manhattan. I'm also the author of the trading classic, One Good Trade, and the Playbook. Click our subscribe button so you don't miss any of our trading videos that we're producing for the trading community. In this video, you're going to get a sneak peek into how we coach our traders to make quality trades. You're also going to learn the changing fundamentals trade that you can find and trade daily. How to use long-term technicals to make better trade decisions. What news is most important in an earnings release? How to get bigger in your best trades. And as always, we hope you walk away with the greatest gift from these videos, which is how to think through a trade like a professional trader. For those who want to learn how to substantially improve your trading, seeing how we do it at our firm, we hope this video helps. If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now, the top right-hand corner of your screen. That's going to open up the free registration page in a new window, so don't worry, you're not going to lose this video. Go ahead and do it right now before you forget. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So it was a changing fundamentals play I made in Stitch Fix about 3 weeks ago when they reported earnings. So big picture, last earnings there was a big gap down and it held below support. Last earnings and that day's earnings reports were very similar. So they reported earnings after the close this day, and it was gapping down and holding below this range you can see here. It's about a 3-month range.
All right, so we've got something that's holding below longer-term technicals, medium-term technicals, short-term technicals?
Longer-term technicals, I'd say.
Okay, and so that gets us thinking that we're probably going to be looking for shorts.
Absolutely.
Because we're below those. The alignment on longer-term technicals is down.
Yes.
Am I stating your thesis correctly?
Exactly.
Okay.
That's exactly.
All right, good.
So they reported 10 cents versus 3 cents EPS and revenue 366 million versus 358 million. So they actually beat, but the active client count was 2.9 million, up 22% year over year. And shares dropped due to the company reporting below the 2.95 million active clients that the street was projecting. So last earnings, active client count was up 25%, which also did not meet the street's expectations, and the stock fell after they reported, and they continued to fall throughout the day. So basically, this is a new growth company that's not meeting expectations.
Okay, and I don't think everyone will understand that. So what you're basically saying is this is a growth company. This is a company that the street is expecting to grow its user base, grow its client base.
It's a new company with a new idea, and they're just not performing as expected.
Okay, and so a growth company is going to get hit a little bit harder when they're not growing, and when the people who are not using their platform, when those numbers of people are decreasing, it's going to get hit a little bit harder. And overall for a company, so we were actually joking about this when in this company, I think that this is the company that sends the clothes to your house and you decide what to keep and what not to keep. And
Right.
I have to admit I had a hard time understanding how this could be a big service. Does anyone use this service? I can't see myself.
Amazon doesn't now too, so they're totally screwed.
Well, that is another thing. But we certainly want to keep those biases aside. But with a growth company like this, their overall revenue is not as important. Their bottom line number is not as important. It's, are they actually gaining traction for the business that they're doing? Are they gaining customers? That's the most important thing. It's the same as when we're thinking about Twitter, what's the monthly active users on Twitter? This is just a little bit of a different metric. But that's the key for a growth company, and that's the key for a company that is looking to add customers. So good. So it was good that you picked out on that.
Just a little bit about the intraday fundamentals. So volume that day, 25 million shares. Average volume is normally 1.4 million. Our vol that day was a 17. ATR $1.85. Heavily shorted stock, 32.2% short interest. Institutional ownership, 53%, and has a 38 million float. So a little bit about the trade plan. Last quarter, we saw the same story. Earnings beat. Active clients did not meet the street's expectations. That day, there was a tough down move after Stitch Fix reported. The stock consolidated at an important higher time frame support from the after hours into the pre-market, then continued to move lower for the entire day once it got below that support level. So this morning, my plan was to look for an opening drive to the downside for a momentum trade. Then I wanted to see a pull into VWAP or look for areas where the stock could not trade above. I looked over my playbook from the last time I traded this and was gathering ideas for how Stitch Fix could trade that day. This was the same catalyst as last earnings, a new growth company with a new idea. They're not growing or meeting the street's expectations. So here's a look at the pre-market. After Stitch Fix reports, there's a hard down move and the stock consolidates at the bottom of the range it's been trading in since October. In the pre-market, the stock breaks below its after-hours consolidation and consolidates lower. And before the open, it breaks even lower, showing extreme weakness.
All right, and so that's significant, right? So we're seeing a little bit of support after the earnings were announced, and we're now below even those levels. So on our longer-term charts, we are technically weak. And then on the most recent trading after the earnings, we're below that level as well. And generally, just from a technical standpoint, we're going to have to go find lower ground. And the stock's going to have to show us that it's stopping from trading lower. But you actually do a really good job right here of identifying a level that you can trade off of. And that pre-market support level there gets touched a bunch of times. That's something really good to look at. I think when you go back and look at that, you may ask yourself whether or not you wanted to short that in the pre-market when it got below that level, and think about whether or not you'd want to add that to one of your strategies. If you didn't do that already, maybe you did.
I did short during pre-market, but it was the second day we were live, and I was a little iffy about doing that. So yeah, just took small size pre-market. So here's how I managed the trade. So right before the open, I shorted because I noticed that it could not get above 21. And that was just a momentum trade for me. It was part of my plan, so I covered when momentum slowed on the tape. Then I noticed Stitch Fix consolidate very briefly for about...
Well, I like that. That's a very legitimate trade. So we got something that's weak technically on a longer term. We're below that pre-market level. We're looking for excuses to short the stock.
Exactly.
So if you can't get above a certain level and you notice that, very legitimate reason to short. What else?
So I noticed this 3-minute consolidation, and I shorted for another momentum play with a stop above $20. So that's right here. Basically, I noticed it was consolidating for a couple minutes and wicking, and it couldn't wick above 20. So that was another reason for me to short with a stop above 20. So it tumbles from there, and I noticed that it couldn't trade below 19. which is this highlighted area. So I covered.
Good, and the thinking there is maybe there's some value buyers stepping in. It's down too much. We're looking for value. One of the ways that we may cover is if we see value buyers step into the stock. If there's a lot of selling but we can't push below a certain level, that may connote value buying. That's a trade decision as to whether or not we want to cover. So good. Looks like we go back up a little bit.
We go back up a little bit, and as it starts to roll over again, I take a short for a quick scalp. Comes back into 19 and I cover. Then the stock kind of pulls into VWAP here, makes a lower high, and I short again against VWAP.
That's good. And so when you find that value area of buying, you want to think to yourself, not just, hey, this thing's going to reverse and go back up, but maybe it's stopping here at 19, it's going to go back up and fail towards that VWAP area, and start to think about some areas higher where you can get short. But we see that a lot, right? And it's like this really weak, it stops going down, goes up towards VWAP, fails at VWAP, and then rolls over for the rest of the day. Good to be thinking of that area as another potential short.
So again, the stock struggled to get below 19, so I covered that position. And then something a little strange happens. Stitch Fix pops into like 1930 from there, and it just it has these strange wicks, and I noticed that they were very low volume, so I immediately hit the bids and got short. And then I covered half into 1850.
When we get below, so we get below that 19. We get below the new low. So again, we get below the new low, we want to be thinking about stocks should be showing me why there's a reason to exit. So we're all clear and thinking lower, lower, lower when we get below 19. Okay, good.
So 1850 held. It traded to 1840. 1850 held, and I covered about half of the position because to me that it couldn't make a fresh low, it couldn't make a lower low.
Yep.
And then 1860 held, and I covered the rest. Yeah, I mean, one thing about the wicks that you're identifying, when something has a high short interest and it's down a lot, you can get that. There's some people who are short that are having some second thoughts about whether or not they ought to lock in some of their profits or get out. So that's good that you recognized what the short interest was before that.
Okay, so you're saying that that's just some people short covering?
When the short interest is higher, you can get some of that irregular spiking action.
Okay. So I think I prepared really well for this trade this morning, and this gave me conviction to short before the open in the pre-market.
All right, good. Let's just go back to the first slide, though. And I think this is what we really want to highlight. You know, the basic, go all the way back to the beginning where you talk about the intraday fundamentals. I mean, yeah, this works. The big takeaway as to why this works is because this is a growth stock and they're not growing. And this is an example of when a growth stock stops growing, that it can really trend nicely to the downside, and you can get a bunch of selling that comes in. When we have such a clean stock like this, I always want to go back and take a look at the news in a particular stock, you know, what was reported, and see if I can decode why it was so weak and so clean. And when we go back and we look at that, that's what we'd find. And then when you go back and do it, you always want to ask yourself, could I have been bigger? Key, huge point to this, though, which is, you know, a lot of times guys will write me in their daily report cards or in trades like this that they should have traded it bigger, and they stop. Or somebody will be like, you know, I really could have made more money in this, and next time I will. And they stop. What you want to do when you find a trade like this, which is super important, is to go back and say, okay, good, I could have been bigger, but then say to yourself exactly where you could have been bigger, what your stop would have been if the trade didn't work out, what your target would have been if the trade did work out, and to do that within your trading system. So like, don't make up this fantastical trade where you're like, oh, I would have put on 100,000 shares here and I would have covered it at the bottom. No, you want to really go back and say, yeah, I could have been bigger. I could have been bigger right here for these reasons. I would have been wrong right here, and I would have covered within my system right here when I was bigger. Being very specific about where and how within your trading system you could have been bigger is key. That's how you get bigger. And it doesn't really make that much of a difference. In fact, some people would argue it doesn't make any difference. When you go back and you mentally rehearse in your head where you would have been bigger, that experience over you doing it live. Your brain doesn't really make that distinction between mentally rehearsing it and doing it live. You'll still get that rep and that internalization of how you could have been bigger. So, good. Any final thoughts? You could have been bigger?
I wrote about how I could have been bigger, more specifically off the open when Stitch Fix could not get above 21.
Okay. Good. Good. And those are the types of things you want to do. Within your trading system, where could you realistically been bigger? And then I would have covered, at 16 cents higher, or I would have given it 26 cents, or I would have given it 11 cents, whatever you would give it, depending on the trade. Hey, go ahead and click our subscribe button so you don't miss any of the trading videos that we're producing for the trading community. And please add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at SMB, Happy New Year, train and trade well.